will be reviewing a tool that I've been using a lot, and many other traders have been using as well. It's a really professional tool. It's Insilico Terminal. I'm pretty sure many of you have heard about it. There are two main advantages to using a terminal to execute trades. In particular, this one that we will see today. The first one is the uh, improved execution. This terminal is, as you will see in a moment, a piece of software that connects via API to exchanges and allows you to trade on their backend. So essentially, you bypass the exchange's native UI, which sometimes can be a bit buggy, sometimes can be a bit congested at certain times, and well, that impacts execution if you can access uh, what you need to work at the moment, your positions basically. So in this case, we will be trading with a trade example. We will show one order type that I use a lot, which is the scale order type, which leads me to the second biggest advantage of using a terminal to execute, which is the availability of more advanced order types. We will see today an example, but there are many. Like the exchanges usually just allow you to enter at the limit at the market. There are basic differences with that. I'm pretty sure most of you are aware. But in the terminal, you have other types of order within that category of limit and market. So we will review one today, and we will make new videos on each one with examples. So we have a recollection to have a reference for the future. So without more to say, let's just jump in. This is what the terminal looks like. You have as a pretty customizable UI. You can move these panels to wherever you need them. I have a setup this way. I have the order book. I have the open orders and positions, and this one, which to me is something similar to how the exchange UI looks, but you will see in a moment why do we prefer to work this way and no longer use the exchanges UI. So let's use a trade example. I've had this trade example from the group. Uh, Rob this morning shared a CRP limit with an entry, a DCA range between the values of 110, almost 111, and 19. The stop will be at 1068, and we can reset all these values and scale into the trade all by setting a few parameters before entering, which to me is fantastic because I know DCA is a very widely spread, widely spoken of topic, but many of us have had some form of issue at some point with not getting fully filled on a move, for instance, or it might happen as well that um, you end up having a worse entry due to the fact that you don't know where to set your DCA, your scale orders. So with the tool that we will see today how to use in practice, we will hopefully get this solved. So first of all, we should select our risk. What we do in order to control our risk always is the basic exercise of calculating a position size. There are video tutorials that we have available as well on this, but I will show you one way that I personally use when I'm scaling into trades using this same interface to both calculate the position size as well to uh, execute that position size, to fill that position size in a pretty smart way, if you ask me. So let's start with that. So I will show you how is the process, and we can discuss afterwards in the comments in the group. Wherever you need, you can ask me, and we can see more examples of this live as well. So we have seen that On average, our entry will be around 110. Yes, around 110 is what our entry will be located, our average entry. So on the limit tab, what this is the way I do it. I type at 110, this account has 1K, and we want to risk, let's say, $10 if we hit the stop loss. That will be a 1% loss in case our stop loss gets hit with an average entry of 110. So the very easy way I do it is like this. I just type in price the average entry that I have in my mind. Uh, in my mind will be our average price once all orders are filled, and we can set our stop loss at 1065. And as you can notice here, it will start to show the account risk. At the moment, it's zero because there is no size. I haven't preset any size, any position size in terms of CRB contracts, which will determine my risk based upon entry price and stop loss. But as soon as we start to move, we will see how here, the more contracts we buy with the leverage we have, I tend to use 10x leverage because I, as a blanket way of what Bybit offers is more than enough for me. And with this size, I also can even trade even BTC, so it doesn't really affect that much. I always recommend you use 10x and lower, and you will again your risk will never be determined by leverage. It will be determined by position size, but the higher the leverage, the less room you have to move. So unless you are super aggressively scalping and you know what you're doing, I would really recommend never use more than 10x. So let's continue with this. As we notice here, with this amount of contracts, our position size will be of 650 CRB. We will be risking 2%. We want to lower that. We want to lose only 1%. So it will be around 282 contracts. It's close to 1%. So I know at this stage that I will need I will need to buy this amount of contracts at this average price in order to lose only $10 if the stop loss is hit at this price. Like, okay, this is fantastic. And if I were to press long here on the limit tab, on the regular limit tab, it will post an order that it will be displayed on the chart right here. So the chart is very useful in order to do this. You can notice how easier it is in order to execute trades, and this is a very simple feature. We will see the scale feature in a second, but I want to show you how it more or less works visually. Okay, so this is not the idea we have. This is an average price, and if we fill here and price bounce, we will make a profit. If it goes down, we will lose $10. However, what we wanted to do is not to enter with a limit, but we wanted to enter with several limits in a range, because we had the idea of entering between the range of 111 and 19 in order to get an average fill at 110. So how do we manage this? Well, first of all, we will nuke everything. These are called nuke functionality or something like that. It's quite funny. You can nuke your positions. You can close everything, or the positions with one click, and it works perfectly. So in order to scaling, we will do two things. On the limit tab, we will click on scale, and we will enter here to 82, which was the amount of contracts we wanted to buy with an average entry at 110 and a stop loss at 1065 in order to lose the amount we had calculated on before. So Next step is to set between which prices we want to scale in. And this is where the tool gets really useful. We will click here, and if we hover over the description of what this designer tool allows us to do, is to visualize and manipulate order prices on the chart before placing them, which is exactly what we need. As you will see, we can enter directly on the chart where do we want to scale. And this yellow line in the middle will be our average price. There are a few more clarifications to do here, but this essentially is the basic way it works. Of course, we don't want to enter at this current price of almost 10 cents up, but we wanted to scale in to an area that the price action uh, where the price action makes sense. Because many times we want to do the DCI orders in a way that makes sense from the perspective of yes, one order separated from the other in a percentage range. Yeah, that's fantastic. But many times what we have to focus is on what actually makes sense from the perspective of the price action. I mean, does price even have a chance to go that way, that low, and to fill our orders, and to fill our orders in a way that fill the lower ones effectively enough so that we can get an average entry that serves our purpose. So all that, in order to do all that, this designer tool comes very handy. So one of the situation we are facing now is that we are watching at this 1 hour chart. We could, for instance, locate our orders from 111.3, yeah, 111.5. We can even do this here, 111.5 to 1.9. Let me check what was the lower end. 95. And we can check on the chart how this will look. So we are looking to get filled around this area, and we expect move to sweep here and move before taking us out in our stop loss around this price. Second consideration when it comes to using the tool, we can lower the time frame. Why? Because it's way clearer, and we could even make some modifications to the trade. For instance, if we think we have better chances to, for instance, start scaling from higher because we have some kind of form or whatever. Ideally, you don't want to do this. You don't want to start scaling here, even though you will have a close enough entry. It's not ideal. It's simply not the best practice. The trades that you're following sometimes will be cancelled before hitting the original top bid, and you will be in a trade already. So that's why I would always recommend, and if you guys have been working with us long enough, you know that how this works. You either manage your risk or you FOMO, but everything has a trade. In the end of the day, everything in trading has a trade-off. And I really prefer to work in a way which is smarter and allows me to leverage this type of tools to also be able to participate in trades and do it in a way that doesn't hurt me. So for the most part, try to enter in ranges that make sense from the technical perspective as well from the call perspective, if you want to call it that way. Like scaling smartly. Don't FOMO, don't rush to trade is not a good idea. In any case, we will start scaling here, and if we agree with the way our chart looks, we see this type of move down and a bounce from here makes sense. Also, a good idea to do a good advantage of doing this is you actually can see how your orders would look like. Where will you